morning, Stocktwits Nation. This is the Daily Rip Live. It is Tuesday, June 17th. I'm Katy Perry, here as always with Shay Boloor, and we have not one but two special guests joining the show today. Austin Hankwitz, co-host of the Rich Habits pod on Spotify and head analyst for Grit Capital, and Jake Wujastyk. Did I get that right? I always
Wujastyk.
Wujastyk.
Well, you kind of had like the mix of European and
So I
English.
literally like Googled it before and they wanted me to pronounce it very authentically. So they gave me Wujastyk.
I mean, in Polish it's Wujastyk, so very
Wujastyk.
close. Yeah.
Okay. Well, of Jake Wu Market Research fame. Guys, how's it going? It's great to have you all here today because there's a lot going on. Shai, first off, how was your weekend? How was your birthday?
It's good. Went to omakase bar. Very relaxing for me. I capitalized on it by telling my fiance to do specific chores I wanted around the apartment for the whole weekend. That's like, 'cause I know like she can't say no to that, so that was like the real gift.
Oh,
But yeah, it was nice. I'm wiser. I'm older. I'm 32 now, so I have a different lens
Well,
clearly than last time I recorded on Thursday. So yeah.
you're gonna be in for a rude awakening when it's her birthday.
Oh, I mean, first off, whenever she's pregnant, hopefully
Oh,
we
yeah.
get there. 9 months of me just doing everything
Yeah,
for her, so I need
raking
to
up
build up.
leaves.
Yeah.
Austin, I haven't seen you in a bit. How's life in Nashville?
Nashville life is great. I got engaged like 2 weeks ago, which is really exciting.
Oh,
I
congrats.
saw you guys are so cute.
Yep. 3 years later, actually, because you guys worked together, I think, at
Yeah,
Public
I
a
know
while ago. But
Ireland. She's a
yeah,
gem.
got engaged a couple weeks ago. Really excited about that. And I also leaned into the hey, we're like fiancés now. You should totally go make me a nice coffee. You should totally, go wash these dishes. So having some fun that way. But yeah, it's been great. It's been a lot of fun. I feel like the summer has been a little bit more relaxing than I was anticipating because of some
Oh.
of these big events. But yeah, excited for the rest of the year. Excited to dig into the markets and all the fun stuff that the show has to offer.
Yeah, Jake, I know you've been very active. I noticed your podcast is ripping. You tweeted that, right? Or your
Mm,
subscription. Something you're like
oh
top
yeah,
3 something.
the subscription on X. Somebody took my number forced, or someone took my spot, so I reclaimed number 3.
All
I
right.
don't.
Was
It
it
was
like
like
an OnlyFans situation? Because you really can't compete with
nah.
that.
Yeah, no, it's just charts.
Okay.
OnlyFans is next. So.
That's actually so funny you say that because I check the Spotify business charts on like a daily, weekly basis to see where the Rich Habits podcast ranks. And number 18 was an OnlyFans. And it was literally like OnlyFans video one, like it was weird. And so I took a screenshot and I was like, there's no way this is real. And I sent it to my rep and she's like, oh yeah, this shouldn't be happening.
Is
So
it
you never know.
talking?
These OnlyFans models, man, they'll sneak up behind you and they'll take your rankings.
Yeah. Well, is that the one where they talk about how much money they make? Because that has a business slant to it.
Nope, this is a girl
Okay.
that's naked. Yeah,
Okay.
this was a naked girl on Spotify.
Okay. Wait, that's crazy. I guess with the video now, that's wild.
Oh man.
Yeah, I'll get
There
you.
is one where they talk about how much money they're making, and I enjoy that
That would be
thoroughly.
cool. No, I respect that. That's like, go
Yeah.
get your bag. Go get your
Yeah,
bag.
I support that. Well, let's get caught up on what's moving in the markets today. First up, stock futures slightly in the red, down about 0.5%. Of course, we had a Truth Social post last night. President left the G7 summit early. A lot of people on edge about what's going on in the Middle East, with investors keeping a close eye on that escalating conflict. I want to start there because Jake, before the show, you mentioned a word you keep seeing in like every news article, and that being drones. How
Yep.
is that? How are you looking at the preponderance of the mentions of drones and the potential future usage, and how are you working that into your investment strategy?
Yeah. So, well, drones are definitely being talked a lot about, but the sector itself just is very boom and bust. So back in November and December, when we still don't really know what was going on in like New Jersey or New York with all those drones and all that, but the sector got really hot and you saw names move. I mean, literally hundreds of percent. So that is one part of the thesis, is that sector just gets hot, especially when drones start coming on the headlines and all of that. So that's a big part of the thesis. And I am a technician at heart, and that's what I mostly focus on. So when you do have an alignment of technical setups and things starting to get talked about in the news, articles, drone strike here, drone strike there. I'm definitely not wanting to make money on war, but that's just what's happening. Drones are a big part of this new type of warfare, and these names do get pretty hot. So I'm really focused on those names right now. Um, a lot of these names are still pretty early stage. So one thing you do have to worry about is dilution, because these companies will pop really hard and then you'll see a public offering. So I'm kind of looking at the names that have already had offerings in the last month and playing those, so I don't have to worry about waking up one morning and saying, "Oh, huge public offering just announced." So I'm kind of focused on a couple names that have had recent offerings, so I'm not going to get sideswiped by one of those events like I have plenty in the past, especially biotech names.
Yeah.
Those are always fun to wake up to a public offering. So
Yeah.
that's how I'm playing it.
So I know you're looking at this broader trend and seeing momentum, but when you're looking at the individual like drone companies, are you making decisions based on the types of drones, the technology, or is it more you're taking a technical analysis of those companies and making a move from there?
Yeah, so ONDS is a name that is kind of more on the commercial drone side. They have a system Iron Drone. So, with Israel having the Iron Dome, just kind of playing off that. And then UMAC is another one I'm playing. And I think that's more on, and a lot of these names, I'm not someone who can
You're
tell
not
you
a drone
their
expert?
exact business model.
That's why
No.
we had
All
you
right,
on.
I can't hear you. No, I'm kidding. Yeah, no. I think they're more UMAC. I think is more on the supplier side, but either one, either way, I know both of those had insane moves. So, I'm looking more at like the historical move and seeing. I don't know if it's just you can say UMAC and that becomes like a meme itself, but like UMAC, UMAC, you know, it seems like the names that have this kind of like can become a word become more traded. It kind of becomes a meme. So yeah, UMAC and ONDS are the main ones I'm focused on, just because I know both of them had recent offerings. So I'm not
Got
too
it.
worried about that. That gives them a little, because a lot of people will, maybe not buy something if they know, okay, there could be an offering on the table. So I'm
Yep.
kind of looking at things that are past that.
Yep. Yep. I think I'm gonna pull up this Polymarket chart they tweeted last night. It's basically vertical line going up. 67% of people in the prediction markets think that will escalate. The U.S. will escalate with Iran. Shy, let's move to you because this is right smack dab in your thesis for the new age of defense. So I'm curious. I know you have your picks within there, but is the breadth of companies you're looking at expanding with the increasing conflict that's happening in the Middle East?
Totally. I bring a pretty big. I call it the new age of defense bucket. I started building that up last year, mainly due to the fact I think the DoD budget is going to evolve rapidly, because again, the new threats are the threats of tomorrow are completely different than what the threats we've been accustomed to. So, like the battles of war aren't going to be decided who has the most advanced fighter jets, who has the largest aircraft carriers, well, missiles, jets, tanks, all that stuff. It's not going to matter as much as it has the past like 50 years. Why is that? Is because the new age of defense is going to be capitalizing on who controls the intelligence. So, who secures the infrastructure? Who dictates the digital battlefield? The digital battlefield is much more important, in my opinion, now than the actual real life battlefield. And you're seeing the Pentagon evolve their budget, same with the DoD. They're rewriting the doctrines of what warfare is, moving from the world of hardware driven supremacy to like one that's more AI, cyber, drones, real time intelligence dictate victories. And that's why you saw like names like Palantir. They caught major bids due to this Iran Israel conflict, because a lot of people are reading between the lines on the reason Israel was probably able to target Iran was due to Palantir. So
Mm.
I think it's my bucket is expanding. Originally, it's been 5 strong names: Palantir, Axon, Cloudflare, CrowdStrike, and Rubrik. But I am expanding it a bit to more of the speculative positions. Like I'm looking at Archer Aviation. I think that is a really interesting component, the eVTOL space, and they also have a software component in their business structure where they can maybe capitalize. But they're catching a major bid still, and it's like a lot of these names that I want to expand. Like ONDS is very interesting for their tech as well and their positioning. There's other reasons why I'm staying on the sidelines for now, but I do think that the new age of defense or security is a really interesting um, thematic to get exposure in because it's defensive, but it's also offensive. And it's one of those safety blankets of all this geopolitical cocktail that we're getting that we always get every couple
Mm-hmm.
months. It feels like where we get a geopolitical headline of something FUD related. Oh, it's going to get so bad. Sharp pullback, a chorus of fear. And then we let the market playbook do its thing where it just essentially the initial wave of panic clears, and then there's some kind of reflexive bid. This more recent geopolitical cocktail, I didn't think it'd last only one day, but it did. It was just Friday. Now we're V-shaping, but I think this won't be the last one. This geopolitical cocktail, it's just the, the world is addicted to alcohol, and they're going to have constant geopolitical cocktail from that.
Mm-hmm.
And the new age defense is going to be a hot area for exposure, and I think it's got a ton of runway. Like it's nowhere close to ending.
Yeah, I'm curious for you guys, and Austin, jump in. Are you in any defense stocks, Austin?
Defense stock specifically, I
Is that a
don't
pillar for
think
you?
so. I'll
Okay.
have to double check. But Shy, I'm curious when it comes to like adding these new speculative names to your portfolio, what's been your approach in the past to do this in a responsible manner, right? Because one of my favorite tweets that I saw over the weekend was Iran's going to now see why Palantir's trading at 300 times earnings. And so I just want to like, for the people who might be on the other side that aren't, growth at all costs,
Yeah.
focus there, how can they get exposure to some of these names in their own portfolios without saying, dang, I just bought something at 300 times earnings? Or maybe that was a good idea. Who knows? So
No,
how are you
it's
approaching
not.
that?
It's
Yeah.
a great question. I mean, for me, some black swan event has to occur for me to not care about valuation when I add. For example,
Mhm.
when a VIX hits a 50 handle, I put all my chips in. That's a black swan event of over fear, too much FUD. COVID was like that. Yen carry trade was like that. This um, tariff calculus make situation with Trump in the East, exact. That was like that. It hit the 50. So like that's when I really go hard on this theme. Now, I don't know, VIX isn't what 15, maybe 16. It's returned towards the mean. These names are so overextended. Like what Austin's saying is like 300 times earnings. Like Cloudflare, I think it's like over 100 times free cash flow as well. Like a lot of these names, I would not buy on a 25% dip. That's the when I
Wow.
advocate for new age of defense, like these are extended. The opportunity to buy was when everything was down
Yeah.
because these
Yeah.
names don't go down due to corporate issues. They go down due to macro environment fear. That's when you capitalize. So that's why now when I expand it, it's going to have to be towards speculative names that their business isn't there yet. So that's why maybe there's a mispricing from the markets and it's
Mhm.
a lot riskier. But those safer names, those 5 names in my bucket, I wouldn't touch. Yeah, it sucks. Like a 50% haircut, like CrowdStrike, I would probably Rubrik, but even Cloudflare and Palantir, like they're stupid expensive still, even with a 50% haircut. It's tricky.
And then I guess to like piggyback on that, right? So let's say, UMAC or, Ondas, these other names here, who are, to your point, growing into these valuations. They're trading at 20, 30, 40 times forward revenue, things of that nature. So from a maybe portfolio weighting perspective, how does someone who wants a little bit of exposure to this defense, bucket, like you're alluding to, is it 5 to 15%? Is it less? Is it more? How are you approaching yourself some, portfolio weighting as it relates to this bucket?
Great question again. I mean, I wish I had the kahunas to do a speculative position for 5%. My rule of thumb is 1%, you grow into it. Palantir, when I got into
Mm,
Palantir under $10, it was a 2% position for me. I was like, it's a black box.
yeah.
I think I understand it. I don't know if I understand it, but if AI is going to hit their potential like I think it's going to, this will be the operating system, and I think it's going to capitalize in the commercial space. Now you see what happened to Palantir, and that 2% position caused me to outperform the market in 2 or 3 years. Same thing goes for the ONDSs, the Archer Aviations, UMACs. Like, you just have to have a piece of the portfolio in those names. Let it do its trick. If it fails, which it could fail, you lost 1%, maybe 2% of your portfolio, and you won't lose sleep overnight. But if you're right, you 10x's, you're gonna
Yeah.
have a top 5 position and grows into that portfolio allocation.
I totally agree with you. You mentioned Archer. Have you heard of JOBY? I've had a couple people ask me
Joby,
about
yeah,
that one. I've
yeah.
not. I think, are they similar companies? I've not looked too far into that.
They have a duopoly in eVTOL for sure. I think
What's
Joby is backed by
eVTOL, Shy?
electric vehicle. What is it?
Is it?
It's
They have the air
flying.
taxis, right?
Yeah,
Flying
it's an
cars,
Okay.
right?
yeah,
It's like a
flying cars.
flying
Just
car.
Got it,
probably,
okay.
virtual takeoff. That vertical takeoff. That's what all electric
Okay,
vertical
interesting.
takeoff. But yeah, I mean, Joby's backed by Toyota. I
Oh,
think they're like very, very involved from the get go. I think Joby's more hardware, where Archer is more new age defense, where it's hardware clearly because they have a competing product, but they have the software components that cause the recurring revenue nature to it, and it's heavily, heavily uh, partnered with Anduril. If you guys don't know Anduril, the most exciting private market out there, everyone wants a piece of that pie when they go public. Um, they are essentially like best buddies. So I think this Archer ACHR, that's the ticker. I think they're catching a major bid because it's a sympathy play for the IPO of Anduril, maybe, and that's the best way to get exposure. But
oh,
also,
interesting. I didn't think
if
about that.
yeah, so that might be a bid. Also, the 2028 Olympics in LA, they're going to be supplying their products for those Olympics, like the premier partnership. So I think
Mm.
there's a commercialization angle that's happening here. Also, the private with Anduril, new age defense, like everything Anduril is going to be doing on like their securities for contracts feels like there's going to be include Archer into that because they're so close. It's very like SMCI and Nvidia, where some reason CEOs, I don't know why, they're just super close. Maybe they're second or third cousins. But Nvidia just really carried SMCI for in 2022, 2023. Feels like that kind of weird angle over here.
Yeah, I was gonna ask if Anduril was one of those companies that's just doing so well on its own and won't go public. But then I remembered that clip we played with the Hawaiian shirt Shy, where he was basically like Palmer Luckey. He was like, "We will be a publicly traded company." So have you heard anything on timing for that, or
Well,
what are the streets saying?
so I think everything changed in the past month when you see these recent IPOs just fly, like fly. CoreWeave, especially because CoreWeave, everyone knows is just a middleman broker. Sorry, not everyone. I think that they're not real. They're finessing a bit. But
Mhm.
the other ones, Circle is doing really well. eToro's doing. I don't know what eToro's doing, but I think they're doing well. I think you're seeing a lot of like test case studies that are succeeding, and now you're seeing a lot of people in that space want to capitalize on it because the appetite is there for new companies and to go IPO. So I think Anduril, for example, they maybe want to capitalize on it because unfortunately, this geopolitical cocktail that we have right now is looking like it might have legs. Doesn't matter if you think Iran and Israel are going to have a deal or there's going to be some regime change in Iran. Regime change isn't a flip of a switch. It's going to last 5 to 10 years, even if Iran's going to change leaders, etc. So I think this macro chaos is only going to continue in the next couple of years. So Andrew might want to go public to capitalize on that. That's why Palmer was saying that on his interview last week. But if you're like an Elon Musk company, you or Sam Altman, you don't go public. You don't need to. Your name is essentially the Nasdaq and public market because you can raise as much fund as possible because people want to invest in your companies. So that's why I think Anduril, Databricks, like those kind of companies will go public, but I don't think SpaceX will. I don't think OpenAI will. It doesn't make sense for them to because they don't have to deal with the political headaches of being a public Trump company, dealing with earnings every cycle publicly, having everyone dissect your information under the hood every 3 months is such a headache that why bother when you can continue doing these up rounds and the valuation goes up and up and you don't have to worry about any down rounds because guess what, if your valuation is getting a little lower than the previous series just don't do another series and wait until it goes back up and all of a sudden you control the narrative. type thing.
Yeah. Jake, have you been participating in any of these recent IPOs? Is that part of your strategy on just like the technical side, or not so much?
No, because I mean a lot of technical analysis is looking back in history.
Yep.
So if you're IPOing, there's no history to look
Right.
back on. Kind of like I was saying earlier with the drone thesis, like I can go back and see, okay, when drones pop up in the headlines, they do XYZ. With something that is IPOing, a lot of the time you have a lot of supply and demand kind of things that need to be sorted out. The dust needs to settle. You could have a huge insider just dump a bunch of shares because they want to liquidate, and they're not just selling because they don't have any confidence in the company, but a lot of people who are in startups or companies that are about to go public, that is their entire net worth and their liquidity. So that's how they draw liquidity, is from shares. So for me, I generally like to avoid IPO names for months, because you do have like that dust kind of settling, and you kind of have to get the equilibrium sorted
Yeah.
out, because there are a bunch of random there could be selling pressure for no reason other than people want to get some liquidity. So
Yeah. Isn't it
that's
the
why I
case
avoid it.
a lot of people are often on that same schedule, like 180 days or whatever? Is that
It's
a strategy to like look at what that date is and play that, or is that too volatile and hard to guess how many people are going to dump their shares when they hit that date?
Yeah, it's hard to say. I mean, each individual has their own personal reasons for selling, but a lot of the time with an IPO, you generally have a pop, you break the IPO low, you have a base forming, and then if you look at Uber, Lyft, a lot of those names very similar, where they initially popped, then they got hammered, and then they're starting to move up. Uber more than Lyft, but yeah, there is definitely a cycle. It's funny. I was at a conference back in probably like 2018 or 2019 where somebody did a study on this, and it was really interesting. And she did kind of mention that kind of cycle where you kind of have a break of the IPO low, and then you kind of you get supply and demand kind of equalizing after people liquidate and are happy with what they were able to sell, and then the market bases, and you kind of move higher.
Interesting.
Well, I feel
Definitely.
like we saw a lot of that with some of these SPACs, right? I don't know if you guys
Mm,
remember Hims and Hers, but they
Yeah.
were a SPAC, right? They
Hmm.
SPACed at like $25, $30. They popped off like crazy. Then they traded down to like $4 a share. And
yeah.
then to that exact
w-
point, you have a little bit of profitability, a little bit of growth and margins, and then you can really begin to trend higher. But I totally agree with you, Jake. I think it's really important for anyone that's trying to navigate a new IPO, if it's Circle or if it's, I think eToro was a recent one or whatever. Make sure you've got one of those like just long-term perspectives. I
Yeah.
think that's
Hmm.
super, super valuable.
I just
well, to
looked at
add
the HIM stock. They're
no,
trading
Hams is
at
crazy
60.
for sure. But
Yeah.
to add more colors to that, why you should wait this, I have a 6-month rule on an IPO. You need two earnings cycles to really
Mm,
understand a company. The reason for that is in an IPO roadshow or SPAC, you see the numbers. It's binary, black and white. This is what it is, but you don't know the semantic layer of that stock until you listen to the management talk about it on an earnings call. That's where you learn the personality of the working climate of that enterprise, how the management talks about their company, what their forward guidance will be, what they're looking towards. Everything's backwards looking really on the facts, but on the earnings calls when you see the forward vision, it's like dating. Like if you're dating someone and you can really like your partner you're dating, but you're not going to bring them into your friend circle so you really know their personality more if it meshes well. Same thing for an IPL. Like you don't want to really bring into your portfolio until you understand the person characteristics of that company, what they're going to be into, and like stuff like that. So I think it's really important to
I
kind of
love that analogy,
I think
Shy.
Shai just called his stock portfolio his friend circle. Is that what I just
no,
picked up there?
Oh.
it
I'll
is.
be
It
your
is.
friend too, Shai. It's okay. We got more friends than just your stocks.
No, Palantir is my best friend. Okay, don't ever disagree.
That's good though, because even the two earning cycles is like you got to see someone like separate from your friends at least a couple nights out. Just make sure nothing weird happens. You want to catch that. This is great. Um, people in the chat are requesting some topics, so maybe we could do a couple lightning rounds. And the first thing someone pointed out, Shy and I have talked about a lot, which is Apple. Um, Apple obviously has been a hot button issue following their big event. Uh, Jake, is this one you touch or you want to pass?
I actually had it last
Yeah.
week,
Okay.
and
What'd you do?
I had the July 18th 210s.
Okay.
And then it was just, I have a kind of a rule. Once I get to about the 5 week mark, that's cutting it too close to me for expiration, especially if the contracts are out of the money. So I cut it. Um, for me, in this environment, I definitely kind of take my foot off the pedal with options and kind of go shares because it's just a little more stable. So right now I'm not touching it.
All right. Austin, do you have any hot takes on Apple?
I feel like, and this is a joke made 100 times now, but like that liquid glass, what are we doing? Is that what we're going now? We're just gonna confuse our grandparents on how to use their iPhone. But no, I think so. Do I own Apple? I do own Apple. I've got some Apple stock across my, retirement accounts and different types of
Mhm.
brokerage accounts. I've got Apple pulled up right now on Fast Graphs, looking at its valuation from a post-COVID, perspective, and it historically speaking, it seems undervalued right now. It seems like, oh yeah, for sure, it's a good idea. Let me pop that open here. So let me share my screen, and then I can share this tab.
Did
Actually,
you guys see the
I'm gonna
thumbnail on
make it
YouTube for
bigger.
the liquid glass announcement? Did you guys see this? The
No.
play button was over the G and the L. So it just had liquid ass. And everyone was like, someone is like
No.
making way too much money to F that up. And part of me was like, maybe someone at Google like moved the default placement, but it was pretty bad.
That is brutal. But no, all I was saying here, trading at, let's call it 198, $200 a share. What FastGraphs does a really good job of is showing you, historically speaking, is the stock overvalued or undervalued, and you can look at different types of, you know, timelines and things of that nature. And I like to use it as a way to look at a post-COVID world here. So going back to 2020, 2021, generally speaking, here we're fairly valued, maybe undervalued, depending on the sort of scope you want to look at. But it seems like Wall Street's expecting 9% EPS growth next year, 11% EPS growth in 2027, and if that you know turns into reality, then we could see an Apple trading around maybe 235, $240 a share, assuming this 27 and a half times forward PE ratio. Multiple expansion can be great. Maybe if we do not have multiple expansion, multiple contraction, we could trade sideways for a couple of years. But in my humble opinion, it's one of those names right now where they're really struggling to have a story. I feel like they're really struggling to, show Wall Street that like they are this AI, they're not just an iPhone company. They're not just like they really are struggling getting that out there. And it's actually been pretty discouraging, in my opinion, to see that the world's most largest company for a very long time dropped the ball, fumbled artificial intelligence. And it's not just fumbled it, I mean, but like you look back to the last 2 or 3 years now, it's like, what have you guys really done? Siri sucks. That's actually funny. I just updated my phone to this iOS whatever, and my phone kept telling me to update. I updated, and I look at my Photos app, and it's way different. And in the Photos app, it like suggests different types of phrases and sentences that you can search, and it'll like make a movie. And one of the suggestions was like dinner dates with Ireland. And I was like, oh, well, yeah, make a movie with my fiance. That sounds like fun. So I typed it in, and it literally like, it was like, oh, we can't do this. I'm like, oh, maybe I typed it in wrong. So I just went back and
You suggested it.
I clicked on the suggested sentence, and it still said, oh, I can't do this. And I'm like, then why would you suggest it? So I think there's a lot to figure out there. I
Yeah.
don't care about
They're
these
gaslighting
Genmojis.
it. Yeah, you should say Apple's AI is
There's the
gaslighting.
opening bell.
There's the opening bell. Did
I
we
was
open
gonna
red?
say in Shai's iPhone, it's like me and my friends, and it's just stock charts. That's what they do for you.
That's so true. That's so
Um,
true.
Well, Shai, and we'll check in on where the market's at, but I know you have thoughts on Apple. I also kind of jovially wanted to say that now they have Trump Mobile breathing down their necks, but who knows? Like, there's more people that are making phones now. Re-articulate your Apple stance. I know we talked about it a few times, but we might have some new people on.
Okay, yeah. I mean, my hot take from a couple weeks ago was that Apple, again, I'm saying this with my Apple AirPods and my Apple phone. Like, I love using Apple. they're at risk of becoming the next Intel. And the reason I say that, like, I'm not trying to do a clickbait right here, is because Intel, a lot of people don't realize they were a massive company decades ago, like massive. Like people, like Intel didn't fail because they stopped making good chips. It really did fail because it kept making chips for the wrong world. And what I'm trying to say about that was they were the center of the computing universe. Like everyone used them. Like as compute shifted from raw power to efficiency, from like those fixed terminals to like the mobile first access, Intel couldn't really pivot, and that's what opened the door for ARM holding to come into their space. And same with like ARM capitalized on mobile and cloud, and NVIDIA also was clearly be able to build a full stack platform for AI, and AMD was able to execute Intel with their Zen architecture and EPIC chips. So the reason I say that is because Intel was a great player in the year 2005, 2010. Apple has not innovated in years. They're at risk of becoming the next Intel because they've built brilliant hardware for an interface model that's being rewritten right now. And you're seeing a lot of their competitors like Microsoft's embedding Copilot into their entire stack. You're seeing Google Gemini become essentially the connective tissue between all their suite of products on search, browser, OS, and their workspace. And you're seeing Meta just go so hard, Zuck, on their lack of innovating from Llama 3 to Llama 4 that he's spending $15 billion on acquiring a talent grab essentially on scale. So I
How
think
big
that,
is that guy's ego, by the way? Can
oh,
you imagine?
I can't imagine. Like he must be living on top of the world
Like
right
you
now.
wouldn't be
But
able to look at me. I would just be like,
yeah.
please, please, part the way. Continue,
So
Shy.
like, yeah, I mean, so like Apple isn't, I'm not saying they're not capable of building the next computing layer, but they should have been leading consumer AI by now. And it's that there, it feels like even WWDC 25 event just 2 weeks ago, their immediate statement was like, we're not gonna have any AI updates. I'm like, what's the point of having this then? Like
Yeah.
it makes it, again, it feels like their narrative is protecting the last compute layer, which is the standard hardware interface model, rather than building up towards the new narrative on what the next computing layer is. So like, yes, they're integrating AI, but integration isn't strategy, in my opinion. Strategy is what's slipping from Apple, and it feels they're becoming more defensive with every AI announcement rather than being a leader. And while others are reimagining what the interface is going to look like OpenAI with the Johnny Ives partnership or acquisition, Apple is just polishing legacy services. Oh, iOS this, Mac is going to the laptops are looking more like this. That the It's like all surface level, and it's providing re- reinsurance and not reinvention. And that's my biggest issue with Apple, where I think that their greatest moats isn't just the hardware. It's like they own the full stack where privacy creates such a high barrier. But I think they're relying on that too much now because that buys them time. But eventually they're going to need a shift from the defensive position they've been accustomed to more of an offensive push at the agentic layer if they want to truly capitalize on this. And WWDC 25 events was lackluster is too kind of a word. It just highlighted their lack of AI leadership. And I think that my tin hat theory is they're going to make a massive purchase for OpenAI in 2 or 3 years for that talent grab to get Sam Altman to become CEO of Apple if they can't capitalize on consumer AI next 2 years. I think it's not the Apple way. They've never acquired really, but they're going to be so behind if they don't capitalize on this next 2 years. They're going to be 5 years of behind of AI that they're going to be pressure on the board. They have $600 billion essentially on, they're doing buybacks. I think there's going to be a massive merger and acquisition. So, yeah,
I think
Yeah.
that's
beyond
my
that
Apple
too,
take.
Shah, that's important to recognize is that's been, Apple's MO for several years now, if not decades, right? I remember when I was in college and I graduated in 2018, they just came out with the Apple like 10 phone, right? Like the big like screen no home button phone. And it was like the Face ID stuff. And I would argue that smartphones were doing Face ID and like big no home buttons for years before that. But Apple's whole thing is like, oh, before we introduce it to our customer base, we want to like perfect it. We want to make sure it's
Yeah.
great. And you see that with Apple Vision Pro. Obviously, Zuckerberg had his like Quest Meta headsets and stuff, and then Apple Vision Pro comes out at 10 times the cost, and it's cool, but like no one cares about it.
Mhm.
But what I'm saying is like Apple's been very slow to react, historically speaking, now with a bunch of this new technology, a bunch of these products. And unfortunately, artificial intelligence is such a fast moving product generally here, that if you are too slow to it, you will be just like critically behind. And I feel like that's where they found themselves now, where they were too slow to introduce this new technology to their customer base because they wanted to perfect it. And now it's seen so much advancement over the last 2 years that they're scrambling to figure out, how do we even do this? How am I going to get Austin's movies on his phone figured out?
I mean,
It's yeah. Go ahead, Shay.
I was just gonna say, like, it's the fig tree analogy. If you guys know about the fig tree analogy, like, you're in front of a fig tree, you're trying to figure. I forgot what book it's from, but you're trying to pick out the perfect fig. Then while you're trying to choose a perfect fig, all the figs die because you couldn't make a decision, go
Dark.
towards one specific fig. I feel like Apple's been doing that. Where just like they're in wait and see mode. But the thing about AI, you're just seeing like Zuck's complete initiative change because the lack of innovation from Llama 3 to Llama 4. That's how important this is in AI, because AI is intelligence, and intelligence can be applicable across every industry in the whole world. It's not like any other tech revolution where it was just product based. This is a character change on the world itself. That's huge. Apple right now is just too slow on the boat, where there's going to be more derivatives of AI. Like what AI is today will not be the case in a couple years. So if they're trying to just solve this stage of AI right now, they're gonna have to probably go back to the chalk whiteboard in like 1 or 2 years to figure out what's the next phase of AI they have to capitalize on. And it's slow moving. And again,
Well,
they have so much.
we do know what the next phase is, and that is embodied AI, right?
Yeah,
And there have
totally.
been, rumors swirling that Apple is trying to figure out humanoid robotics and things of that nature. So maybe that'll be their just like half court shot, trying to figure out how to
Well, it
how to
makes
do
sense
it.
for them to do that though. Like that, they're a hardware based company. Like
They
it's
are.
hard to innovate on hardware. It really is so super difficult. And like physical AI is their next. Like it does not make sense for them with everyone having an Apple TV, Apple phone, Apple AirPods. Like humanoids, like into their ecosystem, it makes too much sense. Like maybe that's their angle. Like I could care less about this first stage of AI. Physical AI, that's where we're going to be making our money. Maybe that's the case.
Yeah. What's interesting is I just like so the clues I look at, like marketer, I love to look at just what the latest boilerplate of these companies says, because
Mm.
the amount of time they put into how they're describing themselves. And when I pull up Apple, it's very backward looking. It's like Apple revolutionized personal technology with the introduction of Macintosh in 1984. Today, Apple leads the world. Nothing's like there's no vision. It's just like we're Apple. And it's interesting when you've been investing long enough, empires fall. And like when we started investing, it probably felt like Apple was always going to be ripping. But like after you're investing for like decades, stuff happens. So it's not that wild to think about when you have more perspective. But it does feel like there's not a real future vision there that they're articulating, whether that's intentional or not.
Yeah.
I would agree. Yeah.
Um, Shai, you mentioned chips briefly, and it reminded me that we wanted to talk about AMD. So they're at a 6-month high. Analysts are hyping their new AI product lineup. I wasn't following it closely. I know you're tracking them, Austin. What's your thoughts on AMD lately?
Yeah, let's talk AMD for a little bit. I love that. So, one of my favorite things to do when it comes to, and this is me just like as a investor, right? Not financial advice. Go do your own research, make your own money, all that fun stuff. But I have a general strategy as it relates to investing that I like to follow, and that is to identify historically undervalued companies. One, right, that are operating in a secular growth trend. So, two characteristics: are they historically undervalued? Yes or no? And are they operating in a secular growth trend? And Shai, you can do this better than I can, but describe to the audience exactly what a secular growth trend is. Because when I think about it, I think about this like technology, this long term, call it 5, 10, 15 years of like, where we are headed, if it's cybersecurity, if it's AI, if it's cloud, things of that nature, defense, right? Things like that. But secular growth trends are all over the place. So maybe real quick, Shai, what are some of your favorite secular growth trends so people can better understand what this like big term might mean for them?
Yeah, I mean, you can call it secular growth trends. You can call it like super cycles. They're all essentially saying that there is a long-term structural shift happening right now that's going to be changing a lot of industries. That's going to provide constant growth over the next 5 to 10 years. So, some examples of that: AI adoption. Clearly, cloud computing was one. That
Hmm.
was a major secular trend. You can make the comment on the aging population is a major one if you're in the healthcare stocks. Electrification of transport was a big one for EVs. Like these are all like examples of secular growth trends, and I think this another. I'm curious on Austin if you think about this as well or what your answer is, but I think this might be the first time in mankind history we're experiencing so many super cycles slash secular growth trends at the same time.
Oh,
AI,
absolutely.
quantum, space, everything is happening. Electrification of everything because of the grid, like everything's happening at once. And I don't think I've ever. I'm only 32 years old, so like I don't know what it's like back in like the 90s, for example. But I don't think it's ever been like this ever, where just so many things happening at once, where you have to. It's moving fast. Information is moving fast. But like for you, do you think there's ever been a time where there's been this many secular growth trends at the same time?
No, no, and I totally agree with you, right? And what's important, in my opinion, is to understand that these secular growth trends are not 12 or 24 months, right? These things are lasting
Mhm.
5, 10, 15 years. And people make the mistake of sometimes Palantir is a great example of this, or Nvidia is a great example of this, of like, oh, it went up so much in 18 months. What's the next thing? Right? Who's the next Palantir? Who's the next Nvidia? I'd argue Palantir is the next Palantir. Nvidia is the next Nvidia, right? Just be
Mhm.
patient. And so as it relates to, back to this idea of chips and AMD, right? So one, historically undervalued companies, and then two, operating in secular growth trends. So I think Advanced Micro Devices, AMD, is doing that. So I've had this stock now since the low like 100s or so. I think right now it's trading around like 125, 130. And we've seen a pretty fun rally. Oh, 129, here we go. And we've seen a pretty cool rally, but I think this is just the beginning of probably a multi-quarter, if not a multi-year rally in the stock. So they had a May earnings call. Lisa Su, who their CEO, she highlighted strong Q1 results with revenue growing 36% to 7.4 billion, driven by a 57% increase in data center revenue and a 28% rise in client and gaming segment revenue as well. She emphasized the company's progress in expanding their AI and data center portfolio. Over 30 new cloud instances were launched during the quarter, including partnerships with AWS, Alibaba, and Google. And after a rocky few quarters, in my opinion, it now seems like Wall Street, especially after this recent sort of conference day we're rocking and rolling with, has bought back in on the AMD trade. Advancing AI event took place in San Jose. AMD made several significant announcements. Most notably was the official launch of the much anticipated Instinct MI350 series, which is said to be in product and shipping with lead partners, including Meta, OpenAI, Microsoft, and others, which is really cool. But long story short, I think there's like, to Shai's point about secular growth trends, right? Lisa Su talked about how the core AI market is expanding by 30, 40, 50, 60% compounded annually, right? And that this is not going to slow down anytime soon. And so I'll share my screen real quick to show you guys something that's exciting to me as it relates to AMD, which is their valuation, historically speaking here. So even if we, zoom in on a post-COVID world, we can just go back and you can see here, right? So this is on fast graphs. I'll zoom in just a teeny bit so you guys can see this a little bit better. Okay, so this is AMD. We're on fast graphs here. The black line is their stock price, and the blue line is their earnings per share. So as you guys can see here, earnings per share in the black line is stock price. They moved in tandem until, let's call it, early 2022, when we experienced very much a bear market. Their earnings followed very much, right? Earnings came down 24% there. I'm assuming, they were expected, because the market's forward looking, right? So when you see the
Mhm.
stock price come down like this, it's important to understand that, Wall Street's saying, oh, maybe the guidance didn't shape up to what we thought it was going to be. Earnings are going to come down a little bit. So it's not rare. It's not it's not uncommon rather to see the stock price reacting a little bit late as it relates to what expectations are. And so now, if you flip that on its head, we've got these earnings expectations of growth this year of 17%, 46% in 2026, and 20% in 2027. And oh my gosh, talk about undervalued, right? So it's like, in my humble opinion, not only do we now have AMD with the new ROCm7, we've got all these incredible, new things that they're announcing, all their partnerships, all these instances, all these awesome like progress behind the scenes. It's in a secular growth trend and it's undervalued historically speaking. So I think AMD is shaping up to be a 150, 180, $200 a share stock in the next 9, 12, 18 months, assuming they can continue this momentum into 2026 and beyond. And it's definitely a larger position in my portfolio because of that.
Austin, quick follow-up just for people less in the weeds of these. AMD, NVIDIA doing well, does that correlate with AMD doing well? Do they compete? Do they work together? What's the relationship between those two companies?
I think the demand is so robust that it's, Shai was talking about earlier, like the duopoly idea, right? With, I think it was JOBY and Archer, right? So like I would argue it's a similar story here with AMD and NVIDIA in the sense that like demand for this technology is so robust that it's not a winner take all market, in my humble opinion. And I think good news for NVIDIA is good news for AMD. Good news for AMD is good news for NVIDIA because they have a lot of the same customers, right? We talked about how they've got these first partners with their 350 powered rack scale solutions with Meta, OpenAI, Microsoft, and others. I would guarantee you that NVIDIA is also selling to Meta, OpenAI, Microsoft, and those others. So I think it's very complementary, and it's why I own both, right? I think that's what's also really important for people to understand too, is a lot of people ask if it's on the show or if it's somewhere else, right? Would you rather have this or that, this or that, this or that? And why not both, right? Check me out on that. Y'all remember that commercial where that cute little girl was talking about the tacos, and she goes, "Well, do we have this for dinner or that?" She goes, "Well, why not both?" That's my investing strategy as it relates to AMD and
Well,
NVIDIA.
Daniel Newman was on and made the same case about SoFi and Hood.
Yeah, absolutely. And I own both those names. It's actually so funny you say that.
Yeah.
So I do think that AMD, like you brought up a great point real quick. AMD winning does not mean that NVIDIA winning does not mean AMD has to fail. And I think that framework is what's been hitting AMD stock for a long time. Because if you heard Lisa Su last week, like we had at Futurum was at the event and we wrote our Futurum Daily Signal about this on Friday, was Lisa thinks it's a $500 billion market. Let's break it down. 25% of that, about 100 billion, is going to go custom. So Meta, Microsoft, Amazon, Google, they're going to go hyper silicon, make their own chips. Now it's 400 billion left. That 400 billion, I think Nvidia is going to maintain 80% of that. So Nvidia will get 375 billion at least of that 400 billion remaining market. But guess what's remaining? $25 billion on the table. That's AMD's opportunity. If they capture that, just a sub 10% share, they're going to absolutely crush it, because right now the estimates on the street are 15% CAGR for the next 4 years on top line. But if they just get a 10% market share of the AI accelerator market, they're going to significantly reaccelerate from those assumptions. And you heard NVIDIA just talk about the AI revolution is going to create $100 trillion in compute infrastructure. There's so much demand that there's going to be more than enough food for AMD to eat as well as NVIDIA.
How does
I
that
couldn't agree more.
25 billion figure line up to like their current annual revenue?
So
they
revenue
make
for
about
this
40
year,
bill,
they're
right?
so 31.5 billion is what
Okay.
they're expected to do this year. And then
So
next year it's
that's
expected to
major.
be closer to 37, 38 billion.
Yep. Okay. Interesting. Someone hollered in the chat. They just wrote oil stocks. Jake, I'm curious because the volatility there, if there's any plays you're making with those, and then we'll zoom out and look at oil overall. But is that something you're tracking on your end?
I definitely look at oil. I mean, Oxy's done pretty well. That's the main name that Warren Buffett kind of has exposure to. I mean, it's tough because as soon as if there is some type of kind of de-escalation, oil's going to probably have like a 5 to 10% down day.
Yeah.
And so these oil companies essentially are just proxies to crude. So, I mean, it's, it's kind of one of those things where, you're just kind of, and this sounds horrible, but whoever's owning oil stocks are kind of hoping this escalation continues, because if it doesn't, oil's going to get hit pretty hard.
Yeah.
It's very sensitive to these types of things. So, from a technical standpoint, something could look pretty good, but then, like I said, overnight news, there's a deal between Israel and Iran, and then, I mean, literally, oil could drop 10% a day.
Mm-hmm.
So that's kind of like, I definitely understand the thesis behind it, but it's just one of those like overnight things that could
Yeah.
totally, the thesis could be gone in 2 seconds.
So many uncontrollable factors. Is there consensus among the trading community of how people are playing this, or is it up for debate?
I mean, I think different people play different ways. People trade oil futures. People use proxies like, Oxy or XOM. So I think it just depends on the person. Some people go by next week's expiration, 10% out of the money calls, which will likely go to zero. So yeah, I don't think there's like a consensus. Oil is kind of a more complicated kind of thing. I mean, you do have some like these smaller cap names like HUSA that have just exploded because they're higher beta names. That's always a name that HUSA is always a name that just does far outpaces everything else because it is a smaller cap. I remember back in like, I can't remember when it was, like mid 2010s, like 2015, 2016, where like some of these names literally went up like massively, just out of nowhere. So, and the price of that stock, it's reverse split so many times, so it never was trading at 150, but based on the reverse split, that's kind of the adjusted price. But that one definitely uh moves high, but then it could, I mean, all these smaller cap names are very volatile. I'm not trading it, but it is one name that did, for whatever reason, keeps popping up on Stocktwits like trending board, so that's why I have seen it.
Yeah, I mean, speaking of crazy splits, are you guys following this Regencell stock? So this is a Hong Kong-based biotech, no revenue, unproven ADHD autism treatments. They went up 300% yesterday after they did a 38-for-1 stock split.
Oh, I
This
did see that.
this
That's so
popped up
funny.
on my feed a couple times. I'm like, I guess the memes are back. But yeah, curious if you guys were looking at that, because that seemed like wild. It looks like their 2025 gains are 46,000%, if that makes sense based on that chart. Could be wrong. But yeah, I think interesting. We talked about biotech earlier. I mean, total meme. But guys, any thoughts on that one as people are looking at the headlines?
Nothing from me. As you guys know, I very much like to invest in companies that I, one, understand, and two, have profits and cash flow and guidance and a management team that can tell me cool things about them. And then, to this idea of like oil, right? Like oil and all these other commodities. I think that's why it's like just so important for people to understand too, that the price of these commodities is dictated by what someone's willing to pay for it. Where from the perspective of an actual company, you can derive to a valuation by a multiple of, price to earnings or free cash flow or like operating cash flow and things of that nature. It makes it a lot easier to figure out what a fair value might be by comparing it to its peers. So anyone out there who might be, new to commodities, just be super careful with, the volatility that comes with these things.
So, I mean, if we're gonna talk about biotech, we gotta talk about genomics today. I don't know if you guys saw the news. Type in VERV. I think the
Oh
whole
yeah.
sector is gonna get re-rated a bit. They're getting acquired by Eli Lilly today
Whoa.
for 1.3 bill. It was a 70% premium. It's tricky because it was $1 billion of upfront cash and 300 million if they hit certain milestones, which makes sense on CRISPR names. Like it's all based on data. I think this sector has been hit so hard the past couple years that they're trading close to cash value. And the tricky thing is like Intelia, Beam Therapeutic, these names, they've had more and more human data validate their science. But because of this high interest rate environment we've been part of for 2 years plus years, they've just been decimated because, like Austin said, they have no profits, they have no revenue essentially. It's just an idea. You're buying an idea. But if Verve, this acquisition, I do think it gives a benchmark now valuation on what the CRISPR names can be bought out for. Because I do think every name in that space, maybe not Beam Therapeutic, but every name in that space will get acquired by a bigger whale. It's just that's the name of the game. So $1.3 billion for Verve is huge because they legit have no drug that's close to commercial, like no drug like, at all. But if you look at, I don't know, look at NTLA, for example, this is a name that is the closest probably to actual commercialization among the CRISPR names outside of CRISPR. And their valuation is at it's $1 billion.
Yeah.
You're saying that the one company, Verve Therapeutic, the unwanted child among the CRISPR names, got bought out for 1.3, but Intelia, one of the papas of one of the parents of the CRISPR names, who has the closest amount of data to commercialization on the human data is real data. They're trading under $1 billion. So I think every name will get re-rated in that space because there's a value comp now associated with
Yeah.
it.
I actually looked into this yesterday because I was curious about the percentage of like biotech clinical trials stage 1 to make it all the way. And it's apparently like universally it's less than 10%. I'm sure certain pockets have higher success rates than others, but that's if you're that early on, and I don't know where these guys are, that's a bold bet.
They're still very early. But I think the thing about genomics though is it's not just like a normal pipe. It's not like a GLP-1. Maybe GLP-1. I shouldn't say that because that's going to change the world a bit because nobody's going to work out essentially. But I think it's going to be like any other product. Like it's not the same because if you're a parent and your newborn baby is experiencing some kind of illness or a baby inside your belly is experiencing something, what are you not going to pay up for to help that baby become healthy? There's unlimited amount of money. So you spend $1 million, $2 million, doesn't matter the price tag, you're going to spend it to make sure that your child is going to be healthy. That's why these genomic names is so exciting. It's just a win-win for society, for science itself, but it's such a sci-fi idea so far yet. But the human data we're getting is pretty assuring. It's just they're just been beaten down so much that I think if Beam and Telia they just double, I wouldn't be surprised by that because they're trading so close to cash value. Like it would not be surprising to me if Beam trades at $30 and Intelia trades at $20 end of the year. Like it would not shock me at all because of the re-rating the whole space.
Because now there's that comp you're saying.
Yeah.
Interesting. Let's check in real quick on the markets. We're down about 100 points in the Dow. Obviously, escalating fears around the conflict, but also there was weaker than expected retail sales this morning too. So we're tracking those things. Guys, I'm going to give you each a final word of wisdom. Could be something you're watching today, this week, something you're interested in, or just a hot take. And Austin, I'm going to start with you.
I would say my final word of wisdom is to ensure that you are not forgetting about some of these covered call ETFs. I mean, we saw this back with QQQI, which is the NEOS NASDAQ high income ETF, outperforming the NASDAQ during times of volatility. We had that major pullback in April, all the volatility we experienced in May. They captured the upside, that came with the markets rebounding. And so QQQI, I think, is something to have on the radar. These covered call ETFs are getting more tax efficient, tax-free income, and no bleeding to the NAV, I think is really important as well. And then, of course, calling out AMD, calling out the Rich Habits podcast, calling out my newsletter, Grit Capital, go subscribe and all the fun stuff. But
calling out Ireland.
Yeah, shout out Ireland, my fiance.
Out the fiancés.
There we go. Having fun here.
Yeah. Jake, what do you got?
Well, so I'm kind of in the camp that, this whole Middle East thing is probably not going to last much longer. I think I don't think the US is I don't think it's going to get involved. I think it would really, really hurt just Trump in general.
Yeah.
A lot of people that I follow on X who are extremely supportive of Trump. This whole kind of unknown about if we're going to join the war or not. Like everybody is just against it. So I think he's smarter than that to just go head first in this war. If that's the case, I think the market will probably continue to grind higher. We talked about window dressing last time I was on. I think you're still having it again now because we're almost at the the end of the quarter. And companies need to show that they're long the market, and that they have exposure. FOMC is this week, so that I think is probably going to change some things. I mean, if I can just share my screen for a second, I think small caps are probably ready to go. I do think this bad news out today is kind of good news.
Why
Kind
is
of
that?
that because it gives the gives the market a reason to, or it gives the Fed a reason to potentially pull back on rates. I mean, if you look at IWM, these are definitely. Can you guys see my screen?
Yeah.
This is definitely the most sensitive group of stocks to interest rates. So if anything does come out with interest rates and potentially them lowering in the future, you've got a very strong setup here on small caps in general, IWM. You've got a lot of volume supporting price here. We had a little bit of a pullback last week. Now we're kind of basing once again at this volume shelf, which is essentially just a huge aggregation of shares that are essentially being accumulated at this area. And then this area highlighted in yellow essentially shows there's not a lot of shares, there's not a lot of friction above if we do get a move up. So, small caps could have a very strong candle probably in the next week or two through this area. That goes up to around 218 to 220. So that would be, a decent, 4 to 5% move up depending on how strong it happens.
And Jake, is that contingent on the rates moving, or that could happen regardless?
I mean, it's one of those things where it could be rates, it could be something else. The thing with technical setups is the technical setup is there, and the news event that triggers it, nobody, you can
Could be
assume
anything.
what it could be,
Mhm.
but at the same time, if everybody knew, that it would already be priced into the market. So, the news event is the trigger, and I'm not exactly sure what that would be. The logical thing would be the Fed coming in and kind of saying that they'll be supportive of rates. But so far they've been pretty strict on keeping things as they are. But, Polymarket, honestly, shout out to Polymarket. They're a great website to kind of see pretty much before anyone else how people are feeling. The
Yeah.
betting markets are extremely accurate for the most part. So that's something I will go to and just check it out and see, okay, what are there any percent changes and probabilities on how many rates there are going to be this year, and that will generally be priced into the market after.
Yeah, I love those random data sources that can supplement. I don't know if you guys saw, there's like a pizza tracker who's ordering pizzas in DC that indicates if stuff's going down. Shy, over to you for the final word of today. What do you got?
I mean, I love that secondary reading on the pizza one, Polymarket. Like whenever I see geopolitical headlines, I just go straight to Polymarket to see, all right, is this real? Because did we get some tick up? Because everyone could spill nonsense, but money does not spill nonsense. Like if money's going there, it means it's real. Let's do the same thing in Vegas lines as well. Um, but yeah, some final words. I mean, Thursday we're off, so I think essentially that's going to cause Friday to be off in a way.
Mhm.
Short week. I don't think anything's going to really buck the trend. And what's the trend right now? It's up to the right, and we're entering the summer months where it's low volume, and it's just gonna be trend setting. So we had the gut punch on the Israel-Iran conflict. The market had bought the bid. It was a very shallow dip, and it was bought up. Don't Doesn't matter what you believe in. Doesn't matter myself, Jake, Austin, Katie. Like follow what the actual charts are showing you, and charts are showing you this is going to be a similar geopolitical cocktail we're accustomed to. Nothing will come out of it. No nukes until that changes. Hopefully, that never changes. But it's just going to be a trend-setting, quiet summer months, and then come August, it's going to be all about rate cuts and the September seasonality. But I just don't think any of these going to really change much in the coming near term. Like this was the Bears' chance to dip 5% SPY because it was overextended. It failed. So like I just don't think it's gonna go have that dip that everyone was hoping for, or expecting.
All right. Chill summer all around. I know we went a little over today, but we had to because you were all here. Hopefully, you guys will all come back soon at the same time. I know, Shy, you'll be back, obviously. We'll be back tomorrow. Our last show of the week tomorrow, as Shy mentioned, a shorter trading week. Thank you to everyone for tuning in. Again, tune in every weekday, Monday to Thursday at 9 a.m. Eastern, and we'll see you guys next time.